All right, good morning. We are live. Friday, PCE morning. We came in basically at expectations. The core numbers came in a little bit hot. Market initially fell here on that news. If you take a look here at the 5-minute, we initially fell on that news a little bit. We've now basically round tripped, came all the way back, and it's essentially as if it never happened at this point. So let's see what we can get. Now, Fridays are notoriously a little bit slower volatility-wise, at least on average, than, like a Tuesday, for example. And volatility has been our biggest number one concern as of late. We've been able to have some moderate, maybe smaller green days last few days. But I'm excited. Let's see what we can get here today. How you guys doing? Good morning. Good morning. Today I'm going to be trading some Apex funded accounts and a couple of Take Profit Pro accounts. I think that's what we'll do here today. Hope you guys are having a good morning so far, and I'm really hoping we get some volatility. Now, if you look up top, the ATR coming in is about 2021. Now, for pre-market, that's not too bad. Obviously, that's going to be driven by the PCE news. Hopefully, we can carry some of that enthusiasm throughout the morning here in the session. We have seen some 12 ATRs in the last week. Man, when that thing starts getting below 10 later in the day, that's a really, really tough time. But anything above like 25 I can live with. But if we can get that baby up to, you know, maybe 40-point ranges on bars today, you gotta love it. Nothing worse than a sideways market. Okay, so we are about 6.5 minutes out from the open. And as far as news for the rest of the day here, we have the, again, you know, at 9 Central, 30 minutes after the bell, we have the final number for the University of Michigan sentiment. The forecast there is 57.9. Listen, I don't expect that to cause a ton of volatility. It will cause a little bit of algo movement right at 9. So I'm going to hold off right at 9. Ideally not be in something if we can help it. But that preliminary number that comes out 2 weeks ahead of this one is kind of like the preview of the final. So the final, and they're usually pretty accurate. So the final is kind of usually just confirmation. Less volatility than the number that hit a couple of weeks ago. So I'm not all that worried about the Michigan number here today, though I'm not going to go out of my way to trade around it. And then we have a Fed speaker. No big deal with this. You know, in 2025, it's not incredibly relevant. Trump at noon. Probably not much volatility there. And then another Fed speaker at 2:30. So we're pretty free and clear aside from that 9 o'clock Michigan number. So that's kind of the outline here for the day. Hey, Tom, welcome. Every single morning, 8:15 Central. Until it's time to cut it. Usually at least minimum 2 hours, oftentimes 2.5 plus. So kind of sitting, honestly, after all that drama, we're kind of flat here. Heading into the open. Now, you look at that daily, we should get context for the day heading in. You see here that we've seen, you know, attempts at pickups and volatility, but really this week has been kind of slow. Really, the past 2 weeks have been kind of slow as far as movement. We haven't had like these big crazy trend days, but they haven't been entirely range bound either. It's been kind of an in-between stage where we've been seeing for sure big ranges, but you could argue that in between, it's more effective to try to catch the little in-between trends because the ranges have been so wide in comparison to the volatility we've been seeing. They have not been wide in comparison to volatile periods, right? Like we saw back here, where these were like trend day after trend day after trend day. But, you know, that right now is what we're looking at as far as inertia on the market. The market does carry inertia. It tends to continue to act the way it's been acting until something big changes. So when you look at the past couple of weeks, it's important to understand that. So you're not betting on some big, you know, 20-to-1 reward to risk trend day that probably, I would love if it did, but probably isn't coming. Okay, those big trend days are very rare, and usually there's some kind of trigger, whether it's just a huge sell-off in market emotion or news. Okay, so there is an edge in understanding that. This isn't all just talk, right? I mean, we have to understand the inertia. It helps you get a little more edge if you're able to really understand, okay, what's probably my best bet as far as trading style here, looking at the last week and a half, 2 weeks. And right now, my thought process on this is, well, look for big, wide ranges, maybe tighter channels in between the ranges, but really, ultimately, trend shifts throughout the day. We've often seen 2 to 4 trends per day, but really it's just trading within a big range if you zoom out. Okay, so you can actually trade it like a smaller trend day if you want, and then just switch the way you're doing so. That was a good example of this was how I traded yesterday. Kind of a mix of channel trading and trend trading. Gotta do what the market tells you, right? Kind of those 3 different styles. Full-blown trend trading, which is wonderful but rare. Channel trading, which is great and more common. And then what we're seeing now, which is a mix of the two, which is also a little bit more rare, but not as rare as a full-blown trend day, which is great. Doesn't happen that often. What's up, Eric? Welcome back, brother. For Apex, do the rules of trading for 5 days with $50 plus restart after you are denied payout? So I believe now it might change case to case. I believe that once you're denied, it's like you're starting basically from like the start. Now, they're not going to reset your balance or anything, but when you get denied, if that happens to you, which would suck, obviously, but it's no big deal. Just trade for, you know, your 8 days or whatever, the way you would normally, and just try not to break, you know, the same rule that you broke. I'm curious why that would... Is that why you were denied, or were you denied because of the 30% rule? Keith, good morning. Yeah, Eric, best thing you can do after that happens to you is just trade within their rules and then come back hat in hand and say, okay, look, I did better, and they'll work with you at that point. So for the improper risk management thing, what you might have been looking at, again, there's a million different scenarios, okay, but it could have been that 30% drawdown, open loss, okay, 30% or plus of the available drawdown, which is either your trailing drawdown, or if you have buffer, it's that number. You take 30% of that, you can't lose, you can't have an open loss, more than that. Or they can also actually call it improper risk management if you are risking. They might not like if what they see is windfall, right? It's kind of a judgment call on their end. If, you know, on one trade you're risking 5 points and on another you're risking 150, but you're not, there's the bell, let's see what we get, but you're not adjusting the size, you're trading the same size. They might look at that and kind of scoff a little bit, I don't know. But, you know, prop trading, it's different than trading a personal account. You have to make adjustments, but that's fine. It's just a different business model, okay? I think a lot of people are under the impression that trading prop is the exact same as trading personal accounts. It's not. You make adjustments, you adjust to this world, and you just treat it like a business, and you write out a plan, and you try to follow that to the best of your ability. If you're eligible for a payout and you don't know if you should take it yet, look back. You should probably know off the top of your head if you did or not. Did you break any of their rules? If you did, then you should probably keep trading. Or you could just get it out of the way, request the payout, and see if they deny you, and if they do, then you start fresh again. Or you could try to clean it up by trading well within their rules for, you know, 3-4 more days, and then see what they say. Yeah, at the end of the day, it's kind of a judgment call. Okay, so here, let's see if we get a downside test of those wicks. Now, I would imagine, now remember, these wicks here, this is the 2-minute chart. Actually, look at it like this. These wicks here were formed pre-market, right? So I can't imagine there are a million stops below there, but there's definitely going to be some stops on bulls who got in on this trend pre-market. They're going to set their stops kind of in the sucker place, right? Just below this wick. Everyone puts them there, and usually we push to those zones of liquidity to test them. You get a trigger and it pushes you through. Okay, so let's see if we get that. It would not surprise me at all if we saw a big old push. Not big, maybe 10 points through those bottom wicks. Here's the test. Let's see what we get. It'll oftentimes take its time on the actual test, and then once you see a breakthrough, it's kind of like a chain reaction, and all those orders start to fill, and it pushes you that 5 or 10 points past. But once those orders clear, again, what happens from there is kind of up in the air. Buyers stepping in. And gonna let this market clear for a few minutes. Start forming something that isn't just chop. Then we'll start looking at what I can take here. What are you guys trading today? Are you trading personal, funded, or evals? I know we have a mix of you guys in here. Evals, funded. 3x with the copier. Bullonox funded, evals. Cool, guys. So we got a lot of evals. Get those passed. Personal. There you go. I think trying to mix is a great plan. There's the break. You guys see that? I mean, what did we just talk about? So the wick was at 52. Oh my goodness. What did we just talk about? We got a 10-point push. Exactly. Now from here, again, those orders, those stops, okay, they've triggered now, right? Now it's a question of where do we go from here? Okay, we have weakening bear bars. Okay, now it's up in the air. The probabilities after that little move just became 51-49 again. At least until we form something better. Big old downside test. See, a lot of this movement as far as the PCE number, I kind of think PCE has become less relevant since kind of we round tripped right before the open. I feel like that, to me, is kind of where the PCE volatility kind of got laid to rest. We reset. We're like, okay, it's not that big of a deal. It's not even all that relevant right now. It's not, 2022, right? And now I think we've cleared that. We're coming into the Michigan number, about 25 minutes. But again, as far as news, that's about it here. Just be aware of that Michigan number, 25 minutes out. Yeah, so tariff talk can happen anytime. Absolutely. Yeah, I saw that. I saw the tariff news as well. But a lot of news, I mean, listen, guys, news, I think unless you trigger a trend, okay, which is a fair argument, you can absolutely trigger, like CPI, for example, can trigger a trend. You can see volatility. It'll go up, and then all of a sudden it enters like an uptrend. Okay, was it triggered by the CPI? 100%. But in most cases, most news headlines, if they don't trigger an obvious trend relatively quickly on like the second, third, or fourth move, usually we can kind of consider the news volatility dead, and volatility after that, I kind of look at it as just regular market movement with kind of a fire lit in terms of volatility, because the charts have widened out, more people are participating, and it becomes kind of back to business as usual. Whereas I think a lot of people, they'll hang on to, like even today, a lot of people are going to hang on to that PCE news, and at 2 o'clock, they're still going to be trading based on the PCE news. It's just no longer relevant. Market moves quick. Again, unless you trigger a trend, which is kind of a self-fulfilling prophecy. So if you get like a trend triggered on a CPI read, a lot of times the trend is not still going at 2 in the afternoon because of CPI. It's not like funds don't know what happened yet and now they're having to buy. It's still going because the trend is happening. All right, so coming in here about 2 minutes out from that 840, which is when I kind of start to look for the market giving us something here. And Michigan number at 9 o'clock. We got plenty of time. Oh, by the way, Apex guys, today and Monday are the absolute last trading days to take advantage of this. 80% off, use code BIG. It gives you the best deal, always and always single day pass, as long as that's what they're running, which they usually do. The 80% off, though, ends midnight the 31st. Okay, so you have not too much trading time left to hit 80, and who knows what it's going to be after that. We'll see. But you don't have to worry about, like, finding the whatever code for the best deal. Just Big just always gives you the best deal. Well, we are now in that horizontal back and forth. What I need here is, I don't care if it's a range, I don't care if it's a trend, I just don't want a horizontal channel. Because you end up with flat tops, flat bottoms, which have a high probability of breakout and a very low predictability, we'll say, of which direction it will break out, because there's no underlying trend. And those horizontal, you know, those flat tops, flat bottoms, the risk just elevates with each additional touch point. Risk of breakout, that is. So it's hard to bet on a breakout in those, because it's like, well, it's a 50-50 shot which direction it goes from here. And it's hard to trade the channel because risk of breakout is high. It's higher than that typical 20% that we see in an ascending or descending channel. So let's see if we can get, you know, maybe if anything here, we see a wide descending range with this lower bottom here. We end up getting maybe a lower top. We come back down. Then it starts to look more interesting as far as channel trading, or trading the trend kind of within a relatively wide channel, maybe 100 points or so. But we'll see how this develops here. I'm looking for at least 3 touch points. Well, look at this. That 20 EMA on both the 5 and the 2 minute. This has been an area of interest, and when they line up, it becomes obviously more seen by the market. The 20 on the 2 minute is relevant, but it's not as relevant as like the 20 on the 5. And the only reason the 20 on the 5, the only reason I care at all, is because I know a lot of people watch it. Therefore, you're going to get some algorithms programmed to also watch it, because they are built to make money off of self-fulfilling prophecies. Okay? So, don't look at technical analysis. Well, I should rephrase. Don't look at indicators. Like, is it good or not? Look at it as, is it heavily watched or not? That's the only thing that matters. Indicators are not meant to tell you when to buy or sell. They're meant to show you what everyone's seeing. It's not worth looking at it if not a lot of people are watching it. At least that's my opinion. But it's the right opinion. Rathman, this is Nasdaq futures. All right, well, it's about time to start looking to see if we can grab some, but first we need the market to show us something here. A lot of back and forth. No headlines coming through on that big wick. Shiloh, what EMA do you use? I use the 20. Yeah, I use the 20 as well on the 5 minute especially. Right now I have the 20 slapped up on the 2. Sometimes on the 2 minute, since it's more data more quickly, I'll throw up a 10 if I'm scalping quickly. Okay, but in this market, my trades are taking a little bit longer on average, so I'm using a 20 across the board. Just on the 5 and the 2. I use nothing on the daily chart, aside from just looking at range. Okay, so if that big wick that we saw ends up being kind of a rejection point, if we can pull back in, get down through the 840s, all of a sudden, you know what we're looking at. A potential descending wide range, right? Which is good, because that gives us some opportunity. A lot of sloppy bars right now, though. You get these really wicky bars. What does that tell you? It tells you the market's indecisive. Right? It tells you the market's not really feeding on itself. We're getting a whole hell of a lot of arguing arguing out of the bulls and the bears. But that big wick that we saw up toward 19,940, probably an institutional move. Probably nothing to do with intraday. Probably a lot to do with like a 3-week, 3-month outlook. Kind of irrelevant. What I would love to see here, you guys remember yesterday we were talking about, I would love to see this market give up 20 and head down toward like 19.7, and well, we're going that direction here. Now, as far as trading today, which is priority number 1, I'd love to see this head down toward 19.8, but maybe 19.8 even, and then bounce, and then put in an additional lower high. Because then you end up with that clean, wide, descending range. Becomes a lot more definitive as far as setups. A lot more 55-45 rather than like, you know, 51-49, 50-50, probability-wise when I say that. Boy, wait here. Go ahead and hit the like button, guys. It helps out tremendously, for real. I know you probably hate when people say that, because it's so common, but there's a reason. I mean, you hit it, even one person hits it, it makes a difference. It really does. Helps out tremendously. Man, this 5 minute. This is a sloppy 5 minute. So you see, we put in that big wide range, and now we're kind of shrinking into the middle of it. I mean, same thing really if you look at the 2 minute. Kind of doing the similar dance here. Kind of rates sitting at equilibrium. Obviously not in the day, but as far as the this big range that we've seen in the last hour or so. And that's tough to position yourself in because there's really no wind. Kind of like you're in the eye. Not a lot going on, hard to get direction. All right, I'm gonna keep an eye on the chat. If something crazy happens, let me know. I'll be back in 2 minutes. All right, here's that downside test. I don't want a flat bottom here. I don't want to reject, or I'm sorry, bounce right at that bottom wick. That doesn't help us at all, right? Because that just forms a flat bottom. What I really want to see here is a lower low, but a substantial bounce, not a mushy bounce, right? That actually gives us something that sets up that we can actually trade. Still very early though, plenty of time. Okay, so I'll just take you through my thought process here. The ATR is currently 35, okay, which is not bad. I'm interested, or I would be interested, in putting a stop limit sell right below this wick for continuation, okay? However, if I need to get a 20, 30-point move just to trigger that, you know, with a 40-point target, 30-point target, hell, even a 20-point target, I'm asking for it to make a 2x outsized move compared to the average range of the last 10 2-minute bars. That's kind of a tall order. Okay, so that's my thought process. If we can get maybe some candles going down in a rollover, then that order becomes smaller. But you have to think about what you're asking the market to do, and as far as what it's been doing, range-wise, volatility-wise, doesn't make sense within your time frame that you intend for the trade to take, which can be, you know, 2 minutes or it can be 2 hours. Gifted King. Oh, man, it's early to make that assessment. Don't lose hope. We'll get some trades here today. Definitely choppy, though. But I don't, you know what? A lot of people always say, it's super choppy, and they throw that word around. Sometimes it is choppy, but a lot of times when people say it was choppy, they just happen to have a red day. And that's okay. Red days are part of the game, man. It doesn't mean that it was so choppy. You just read it wrong. Nico, what are your thoughts on tick charts? So, okay, so tick, I don't know what you mean by the last part. Tick charts are, it's fine. It's just a different way to visualize the data. I have nothing against tick charts at all. In fact, if you're used to tick charts, you should use them. Me, I've just always traded time-based charts. I just don't really have any reason to switch. If it ain't broke, don't fix it kind of deal. There's no right or wrong way to do it. Do what works best for you, how you best visualize it, and what you've seen success with. If you tried trading a 2-minute chart, like I'm trading here, and you lose for 3 weeks, and then you switch to tick charts, and all of a sudden you're break even or winning for 2 weeks, Well, guess what? Don't trade a 2-minute just because that's what I trade on stream. Trade the tick. So you look here, guys. There's something going on. You could draw it like this. Some people might draw it like this. Okay. I'd probably leave it like that just because I think that's how most people are going to draw that. But now when we're getting down here, what I want to see is this kind of deal. Okay. That's not... Oh, goodness gracious. That just happened in real time. Good, that's what I was just explaining. That's what I wanted to see happen. So we were starting to form this kind of deal. What I really want to see is this kind of thing happen. Okay, we'll see that. We'll see. I don't think we got a headline, but it looks like we may have. Nothing coming through the wire yet. Weren't you guys in a trade right there? That was a crazy move. Yeah, there you go. The sentiment number. 57 forecast, 57.9. It's 9 o'clock already. Okay. So that volatility will die down within a couple of minutes. And then typically, because again, the final is nothing like the preliminary. The preliminary read is going to give you the preview. And they're usually pretty accurate. So that came in lower than expected. But usually you're not going to see the Michigan number trigger some kind of crazy... like trend day. All right. So let that volatility clear. That'll only take a couple minutes. And then, that was actually really good, what just happened, because now, if you look at the 2-minute, things are starting to look a hell of a lot more kind of like this, which would be wonderful for our case, trading, right? We start trading this descending channel. Now this next test becomes very, very important. Let's see if we can get a bounce. And if we have to adjust our trend line, that's fine. I just want to see where we, I just want to see a downside test toward here and see what we can do. What is the strategy behind the 2-minute rather than the 1-minute chart? There's no secret chart. No chart is better than another. It's just how quickly do you want the information to come to you. So what I have found on futures is that 1-minute charts give you a lot more information more quickly. But they also, the way that I trade, I end up taking more trades and they're not necessarily better quality on average. So I just prefer the 2-minute because it offers a good amount of opportunity when the market's a little more normal. Volatility lately has been very low, but it doesn't flood me with having to make decisions maybe too quickly. And it also doesn't flood me with setups, and my average setup quality I think goes up a little bit. Just a different way to digest the information. There's no, it's not like if you're losing money on the, 2 minute that you're going to make money on the 1 minute, for example. But if you're losing on the 1 minute, you might start making money if you switch to like the 5 minute, because you're waiting longer and your setup quality is likely to go up. But a lot of people stop there, right? They won't continue to try to push their sample size of trades once they find their edge. So once you claw back and get an edge, and you're probably taking less trades on average, what you really should do is try to take your best setups more to beef up the sample size. Right, like the casino business model mentality. Take the side of the house. Try to get a big sample size, but don't give up your edge doing so. Chris, would you say the less experience you have, the higher the time frame you should learn and trade on due to the information overload of it? I would agree with that statement, yeah. I would say if you're trying to be a day trader and you don't have a lot of experience, start with a 5 minute chart. That would be my recommendation. And then if you're looking to amp up the amount of setups you take and you feel like you have edge on the 5 minute, maybe switch to a 3 minute or a 2 minute. A lot of people, they start on the 1 minute and it's probably too much information too quickly. Now on momentum stocks, I think the 1 minute's the way to go. But that's a whole nother world. Steam, I only ever take payouts when I do negative risk reward. Yeah, listen, it's just a probabilities game. Negative reward to risk is not wrong. It's just a math question. And it's frustrating, but I guess I don't really care. But a lot of YouTubers or whoever on the internet will tell you, if you want to make a lot of money trading, you have to have a 5-to-1 reward to risk. It's like, tell me you don't understand how to do basic math. If you have a 92% win rate, doesn't matter. And the win rate goes up with negative reward to risk. It just does. It's a math question. If you have some crazy reward to risk, 3-to-1, 4-to-1, 5-to-1, and you should do that, by the way, in certain situations. That is also not the wrong answer. That is sometimes the right answer, but guess what? You're not going to win 82% of those trades. The market will not allow that to happen consistently. It's too efficient. So if you can win 22% of the time, but have a 5.5-to-1 reward to risk, guess what? You're making money. But if someone says, I have a 5-to-1 reward to risk and I win 82% of the time, okay, well, they've taken 4 trades. Like, the sample size is probably tiny. Trading is not as simple as everyone wants you guys to think, but it's just different. If you understand the math, it's not hard. You just have to think for an extra 2 minutes and then you understand it all. Well, we're breaking that downside trend line, so we might have to adjust. Well, we're gonna have to adjust this trend line here. That was not set yet, by the way, which is why I didn't trade that trend line. But we're breaking that, which is actually a good sign, because I remember yesterday I was saying I want to see this thing head into the 19.7s, and here we are, which is good, because downside moves get fires lit. They get volatility going, and look at the ATR. We're creeping up on the average true range, right? 35, that's a beautiful thing to see. This bar, 46. Goodness, if you were here the last few days, that makes you smile. At what point do you say, okay, this is a sample size I can make judgments off of? 100 trades, 1,000? Thanks for the answer. So I've always told my people, test a setup, just get 50 under your belt, see how the data looks. If it looks really, really awful, throw it out the window. It's not worth wasting more time on. If it looks okay, push to 100 trades and see how it looks then. If it looks amazing, you can probably start making decisions and sizing up a little bit off of just a sample size of 50 if it looks amazing. The more outlier the data looks, we'll say, the smaller the sample size you can make educated decisions off of. The more break even it looks, the bigger sample size you need to make a real decision. So if it looks pretty break even, well then you probably need 500 trades to decide, is there edge here? Okay, so now what I'm looking at here, guys, is if we can see these bars, you see these growing bear bars closing near the low, all of a sudden now I'm thinking, okay, I'll sell the rollover if we see this bar grow and close near the low. That's a lot of information. Glad to be here, Kings. B trades, hardened mentally to stomach the win rate on a high risk reward strategy because wins are much less often and they set up less often. All right, so we're a minute out from the close of this bar. I want to keep an eye on this up here. But to answer your question here, everybody preaches high reward to risk because it sells. Because new traders assume that every trade has a 50% probability of success. That's not true. So I can go make a video and say, if you want to get rich trading, you should really have a 5-to-1 reward to risk. And everyone will go, oh my God, I love that idea. That's such a great idea. And I'm lying to your ass because you're going to have a 21% win rate if you're fucking lucky. It's complete bullshit. It's a good strategy if you can win and have edge. But guess what? New traders are going to quit because everyone hates losing 80% of the time. I think new traders should try maybe negative reward to risk so that they win all the time and they don't quit. Success in trading is 50% not giving up. And it's a hell of a lot easier to keep going if you're winning a lot. Okay, we got to pull back on that bar. That's not a sell setup for me yet. We have to wait to see how this next bar develops because you see we get this wick here. We pull back and close. That tells me buyers have just stepped in a little bit. Not enough for a big reversal buy. That'd be a crazy trade. But I would say this is about 48-52 probability. I'm looking for 55. But I think a lot of newer traders would do well if they said, you know what, let's go negative reward to risk and just try to win 80% of the time. Because when you're winning all the time, it's easier to keep going. And quitting trading is a surefire way to make sure you never make this work. Momentum this morning, it was slow. The momentum market right now is a little colder. We've been able to make things work, but this morning was slow. Pre-market, the scans were kind of dead. But that's the nature of the momentum market. Sometimes, you know, you make all your money for the month in a few days, and then sometimes, you know, it's cold for 2 weeks. And then you have markets like 2021 where it goes nuts. All right, we're 38 seconds out from the close of this bar. We have to see where this one closes here. And if it closes near the low, then I'm gonna plan to sell that rollover if we close near the low of this bar on the 2-minute chart here. About 15 seconds out, we're getting a pullback here. Let me move my mouse so you can actually see what the hell's going on. You see that we have shrinking bear bars? Pulling back, big old wick. So then it relies on the next bar to see how this bar closes. Got a minute and 15 seconds before this 2-minute bar closes. Looking a little bit better here. I want to sell these rollovers, but it has to close and give me good, most recent information in order to do so. Hey, Eric, so much for sideways action. Hey, be happy, brother. I'm thrilled that we're seeing this right now. I love it. B trades. My trading turn for the better when going for 1-to-1 with smaller targets and trading more often. Wish I had taken this approach earlier on. Yeah, as opposed to what? Big old reward to risk, 5-to-1 reward to risk. You just lose. Everyone hates to lose 80% of the time, and that's what everyone leaves out when they talk about that. On NQ, what would the stop loss have to be for a 5-to-1 reward to risk? 150 points? Do whatever you want. You're going to go 5 to 1. That'd be 1 to 5 reward to risk, or 5 to 1 risk reward. Whatever your target is, maybe 10 points, then you would risk 50. On prop, though, 5 to 1 risk reward is the max, at least at Apex. So to account for slippage, you would want to pull that back a little bit. It's a little extreme for prop. But in personal accounts, you can do whatever you want. Okay, here we are. Getting a pullback again on that bar. Okay. I'm looking for a bear bar closing at its low with relatively good size. And I'll immediately sell the rollover. Gotta be patient and then hit it hard when it comes. B trades, LOL, yeah. Targeting setups 2 to 1, 3 to 1. Setup 2 to 3 times a week. Yeah, I mean, listen, a lot of this is personality driven as well. You guys watch the stream and you say, wow, you're really patient. Sure, but a lot of people take 2 trades a week, like you just said. I'm a scalper, and if the market gives me 10 trades in an hour and a half, I mean, you bet your ass I'm taking 10 trades in an hour and a half. We just haven't seen that this week. So I'm patient when there's nothing there. Because I had a lot of evidence that says, hey, when there's nothing there, when I take trades, it doesn't work, and that's painful. But when they're there, I'll hit them. Yeah, Chris, it's going to be very individual, personality-based. Looking for a long here? No, not yet. Nope. Nope. With futures, you gotta stay dumb. Do what the market tells you. At least that's my approach. Trying to bottom tick is a recipe for disaster. And I did it. Right, I made that mistake. Mostly with like ETFs and stuff. This is years ago I'm talking. Just get burned. But trying to bottom tick or top tick and go counter trend like this on futures, a lot of people get hurt. And very few people make that work long term. Am I done with the daily up? I uploaded a video yesterday. I run a negative reward to risk at 74% win rate. Seemed odd at first, but sample size is large enough to believe in. Glad to hear you agree. It's just a math question, Bigfoot. Absolutely. Okay, we're a minute and 20 out from the close of this bar here. So looking at this 2-minute here, if we can get it closed near the low, then I'll sell the rollover. And sometimes when you do that, you catch the reversal and you get stopped. So what? It's part of the game. But if it's 55% probability, it's a winning trade. We're getting this wick here now. 45 seconds until the close of this bar. I want to see that dump off and close near the low. Hey, young man, welcome back. Every morning, 8:15 a.m. Central, we're live. Close this bar. You guys see this timer down here on this chart, by the way? That shows you exactly when this bar is going to roll over. Okay, now this information here, is it enough to take a short? No. Right, we're getting wicks. Buyers are stepping in. Now the next good question would be, well, is it enough to take a long? No, it's not. We're still in a huge overarching bear trend. Gotta be patient until you're not, and then you hit it. Are you thinking we go into a bear market? Okay, so my thoughts on this are, I personally, for momentum trading, I would not want to see that because bear markets wreak havoc. But the momentum market for the past 2 to 3 weeks has already been cold, so it wouldn't be much of a difference. For trading futures, specifically, I would love to see a bear market. Now, long-term investing wise, yes, you hemorrhage in the short term, but the point is to hold. But what we need right now is big old volatility. So I would love to see that. But it's a give and take, right? If we could get volatility back into the futures world without going into a bear market and then keep the momentum trading hot, that's best case scenario. But I'll take what I can get. Okay, 30 seconds out from the close of this 2-minute bar. If we see a close, and you're looking right here, okay? If we see a close near the low, then you bet I'll sell that rollover. Pull back, hands off. See, we wicked right back up to the wick of the previous bar. Here, you can actually, I'm sorry, it's kind of small. You see that with that close of that bear bar? Hit right back up to the close of the previous bar. What does that tell us? Most recent information, buyer stepped in. Do you always wait for the bar closing before entering a trade? Typically on continuation or trend trading, yes, I do. For reversion trading, no. But right now, we are not reversion trading. It's a great way to barely put up a fight and just get killed. There's no channel here, right? This is just a trend. But with trends, I like to be picky on my entries. Now, listen, guys, this is important to understand. I think I should explain this. You look at the daily chart on the bottom. We talked about market inertia at the beginning of the stream. Got 50 seconds out until the close of this bar, by the way. Talked about market inertia at the beginning of the stream. If the market right now was like trend day, trend day, trend day, I would enter this trend basically anywhere. Okay, I would look for a good entry, right? Maybe a pullback to the close of a previous bar or a close near the bottom. But since we've seen volatility die in the last week and a half, really weak, I have to be more picky on the entries because we're making an outsized move right now and the market could very well say, okay, that's enough of that and just, reverse. So I have to be picky with the entries. 15 seconds out from the close here. You look at the 2-minute chart. Top right of your screen. That'll barely close green for the first bar in, what, 12? Oh, quite a few. So this year, we're going to see an attempt at a reversal here. You get that big wick with a green bar breaking the red bar close streak. That doesn't mean they're going to succeed. What we could see here in the coming maybe 20 minutes is the forming of a descending channel, which I'm also totally cool with, by the way. I wish there was something with less than a 25K account that could have margin but not leverage. Yeah, so you're talking about PDT, correct? Because margin lets you above PDT, which is 25K, go through all your money as much as you want. You can trade through it as much as you'd like. Below that cash account, you have good faith violations to worry about. The way around that, by the way, is to trade futures. No PDT rule, futures are America, whereas the stock market is anti-American dream as far as PDT. I love stocks, okay, but PDT to me is a disgusting rule. Bizarre. A lot of people lost money in the dot-com bubble, and they just said, you know what, this is how to fix it. Let's protect people from themselves. That's not what this country was built on. Disgusting implementation of a rule, by the way. Okay, so here, these couple of bars here, we're trying to make a decision on the market. Either we're going to continue the trend, in which case I'll continue to trade the trend, or we bounce and end up forming potentially a descending channel, which I would trade the top end of the channel. But I'm thinking short across the board right now until the market tells me otherwise. Do you only trade NQ, or do you also trade other instruments like commodities or bonds? I trade NQ for futures, and then I trade stocks every morning, momentum stocks. I mean, investing, I don't know if you're counting that. And then options. I'm a big fan of net sell option strategies. So that's going to be sell to open strategies and spreads on options. Very different than buying, by the way. But leaps are cool. I like leaps. If you haven't already, guys, make sure you're subscribed. Every morning, 8:15 a.m. Central, we're live. Okay, here we are, getting to test of the low a day. Watching the 2-minute chart here. This is what I'm watching. Just watching for a close at the bottom of a bear bar. A growing bear bar, depending on how many we see here. At low of day would be wonderful. Then I sell the rollover. Few seconds out from the close here. Let's see what we get. Now we wicked back. You guys see this? Here, look at the 2-minute. We wick back right above the close. Or, I'm sorry, right above this wick. See that? Tells us the bulls were trying to hold on. Obviously, that didn't work out for them. Just being picky with my entries here. Because, again, if you're just joining us, the market inertia. The market inertia has been not trend day driven. If it was, I'd have taken an entry a while ago. This is beautiful, guys. We've been talking about this all week. Yesterday I said, hey, let's get it pushed down to 19.7. The day before that I said, man, I'd love to see this market head down to about 19.5 for the sake of getting some volatility here, which is beautiful. 50 seconds out from the close of this 2-minute bar. About 12 seconds. Give me a push. Give me a push downside, close near that low, and I'll sell the roll over here. We're just not seeing that yet. Seeing a lot of bulls trying to step in at the last second and really prop this thing up. Probably institutions stepping in, buying the dip. That doesn't mean that I'm going to buy the dip, though. The cash account is BS too. If you sell for profit, you should have that amount accessible for trading immediately instead of having to wait 24 hours. The entire system is very messed up. The banking system, the fact that in 2025 you have to wait at all for your money in any case is insane, and it's fairy dust. It's made up. There's no reason that they need to hold on to that money aside from collecting interest. Everything should be instant in today's world, and it's not. Okay, 52 seconds out from the close of this bar. And by the way, that goes for your accounts as well, your portfolios. I don't care if you have $3 in a portfolio. You should be able to buy partial shares 1,000 times a day. That's what this country was built on, the freedom to actually try. And PDT, whoever had this idea, what a train wreck of a rule. Eight seconds out from the close. Come on, give me a close near the low. Do something here. Goodness gracious. I'm not against selling the retest of the high, though, of a previous bar. I'm watching here. See if I can't take a starter. There we go. We'll see how that works out. Okay, sitting short. See how that works out. My target is kind of down toward 19,617. Hey, Skeptic, there's a difference between FOMO and sitting here for the last hour waiting for an entry. And if it doesn't work out, you can say, oh, you're a moron. That's fine. It's out of my hands last week, but I'm going long today on a lot. Didn't they believe most of the losses during the dot-com bubble was due to day traders? I think they believe a lot of them were, but it was also due to... I mean, I don't know if you can say they were due to day traders. It was due to investors just buying stock, hoping it'll go higher. Okay, I'm, again, target down toward 19,617.50. You know what? Even if the entire which it wasn't, but even if the entire dot-com bubble were caused by day traders, here we are, about 10 points out from target. Let's see if we can hit. Again, 617.50 is where my target's sitting. Got to get down through this 620s. There we go. Okay, so that'll be out at target. And there you go, you get that big dump off. We talked about this yesterday. It always feels that way, right? It hesitates to hit target and then it dumps off through right as soon as you're out. All right, so that puts us up. I think, yeah, we're sitting up 1,200 bucks on the day so far. Let's see what else we can grab here. So, okay, back to what I was saying. Even if the entire dot-com bubble, the entire thing, you could prove was caused by day traders, who gives a shit? Should you start protecting everybody from themselves? If you FOMO'd into the dot-com bubble, took your last 150,000 and lost it, I mean, isn't America kind of meant to say, well, that's kind of on you? make it back and try again. That's what this country is for. And that's why I can love it so much. And to say, you know what, we need to implement this rule so that if you have less than a certain amount of money, you're too stupid to try. I know that this is a... this sounds kind of nuts, but a huge, huge goal of mine is to have some kind of hand in getting, even if it's small, some kind of hand in getting this PDT rule lifted. And it's not about PDT, it's about America. It's a long-term goal to have some hand in doing so, but that's important to me. All right, so I'm still kind of looking for similar setups here. Same thing here is what we're looking for. Now these bear bars, they're slowly kind of coming in as far as range. Okay, obviously we had bigger ranges a little while back, which is normal. We're talking 930 versus 9 now. But I am considering that. Looking to see if we can't get a close near the low here of a bar. There's a doji with a flat bottom. This setup right here, you look at those last two bars with this third bar. High risk of downside breakout, but an attempt at a bounce. That's what we're looking at. Josh, I lost everything back in 2018. That was a tough pill to swallow. But Josh, maybe you'll disagree. But would you agree that looking back, that was on you and you should have the absolute right to go just as hard again and try? Even if you had $10. Trade as much as you want. 100% on you. There you go. I agree. I agree. There should not be these silly, unnecessary regulations that tell you how much you can trade your money. It's anti-American. Okay, we got about a minute out until the close of this bar. You see that high risk on the flat bottom, right? High risk of breakout. All right, young man. Get out of here. I'll see you Monday. Good work. Damn straight, BC. It's your money if you want to go to the casino. You know what? You know the messed up part is if you can take your life savings, go down to the casino, and bet it all on black, and no one is going to stop you. But the second you want to actually do something that you can procure an edge in, like trading, though it is difficult, but you can, now someone's there to stop you. Liberty, I'm up 10K across 3 platforms today. Good work. Good work. Okay, so we're getting some wicks here on these downside bars. You guys see that? So the bulls are stepping in here for whatever reason, trying to prop this baby up. Again, I'm not convinced. I'm not willing to go counter trend here until we have some kind of proof that I have reason to do so out of the market. But you should understand that if you are someone right now who's buying this dip, the way that the probabilities in especially the futures market work, if you're buying this dip right now, your probability is very low. but your reward to risk is potentially very high. That's the trade-off here, right? So on a reversal here, I'm really looking for, with a big downtrend like this, if we could get 3 bull bars closing near their high, or maybe 1 bull bar closing near its high, and then a doji, and then a third, or I guess second you would say, but the third bar in the setup, bull bar growing and closing near its high, then I might buy the reversal. But until then, I'm thinking still to the short side. I didn't fight in two wars, Adam says. I didn't fight in 2 wars so the government can protect me. I did it so they can protect our freedom. Damn right. I did my technical analysis yesterday and saw the bear market coming with the PCE index releasing, but I didn't double down until near the end of the dip. I should be up 500 plus a contract. Move on. You know, as soon as the market, I say this to people a lot, and I think a lot of times they go, okay, yeah, but I still feel bad about what happened. Every single morning by 8:30 a.m., sorry, 8:31 a.m. Central Time, 1 minute after the opening bell, every single one of us has missed out on life-changing money somewhere in the market. You could have taken your entire net worth and bought an options contract the day before that is up 2,000%. Move on. You already missed out on life-changing money the second the market opens. Don't think about it. How do I get more confident in placing trades and maximizing my profits? Well, first of all, you have to find an edge. And to get more confident in placing your trades, trade smaller and trade more often until you find the edge. Trade very small, smaller than you think, find the edge, and then you can start scaling. Okay, so waiting for the market to either confirm some kind of attempt at a reversal, which is going to take at least 3 bars here, or break out through the lows again, and then I'm still thinking short side. Till that happens, I'll be back in 2 minutes. All right, what happened here? Attempting a reversal, did not get a growing bull bar. We got kind of a shrinking bull bar. And you also have to consider that we are coming into the 20 on the 2-minute, but the 20 on the 5-minute is still quite a ways away after that move, so gotta let something develop here. We may end up seeing an ascending channel, though that's very early to say that. That would open up some scalp opportunities. So again, if you're just joining us here today, up one trade so far, up 1,200, trading funded Apex accounts, Take Profit Pro accounts, both of which, by the way, you can always use code BIG and it'll give you the best deal available right now at Apex. Ends Monday night, 80% off, single day pass. You can pass your eval in one day, be trading in a funded account the next trading day. But you gotta use code BIG. Same at Take Profit Trader, not the same deal, but same that it'll always give you the best deal. So this channel, guys, by the way, is kind of tight to be scalping. I mean, really, I wouldn't even call this a channel. This here is what I'm talking about. That is a very high risk of breaking out in either direction because it's so tight. That is what I would call kind of a chop channel. Very difficult to scalp inside of that because it's really only 15, 20 points wide. How do these funded accounts work? I've always been intrigued. There's a lot of rules. I think it'd take me about 15 minutes to explain all of it, but essentially you do like a test or an evaluation, and if you pass, then you get in a funded account, but you have to trade based on the rules of the prop firm, which they all have pages that explain it. Okay, so heading back downside here, let's see. Honestly, I would love if we end up seeing a break of this low and then a close again, like last setup that we took. You guys saw close near the low of a bear bar. Actually, the last setup we took, we sold a test of the the open of the previous bar. But same concept here is what I'm looking for if we can see a turn back downside. Nah, King, it's going to depend on the firm. Most firms will put you, it's still a simulation environment once you're in a funded account, but it doesn't really matter because it's very similar to real market conditions, and they still pay you out real money. It's just a business model at some of these firms. Even if you're trading in a funded account in a sim environment, it really isn't very different because they'll still pay you out. But some firms, like for example, the futures desk, once you pass, they put you in a live account. They give you real money, and you can take like daily payouts. It just depends on the business model, but they're all very similar on the end of the trader. It's just they have different rules. Because at the end of the day, if you're getting paid out real money anyway, as the trader, does it really make much of a difference if you're trading in a sim environment or a live market? I mean, not really, right? So is it like them hiring you to trade for them? There's a profit split, like a Take Profit Trader, but not really. It's more, you're treated as an independent contractor. It's just their business model. In order for them to make money, they have to have some winners. So you, if you're a winning trader, basically become one of their winners. That helps them stay in business. All right, so the bottom of the day here thus far, what are we looking at? Kind of down here around 585. I'd love to see a break downside through there. And then all of a sudden, we could be looking at a descending channel, which would offer quite a few scalp opportunities. But we got to see how this develops here. bottom wick like we saw. Is it an attempt by bulls or market makers taking out stops? Well, it's not, I wouldn't say market makers. I would say it's just stops getting taken out in general, but it's also an attempt of bulls to buy the bottom of the day. And then you're also going to get stops, sell stops that are triggering. And then once those sell stops clear, what are you left with? Well, you're left with buyers who are buying the bottom of the day, who wick it back up a little bit. It's just order. Just think about how does the order dynamic look in certain setups? I think little situations like that, I think people kind of overthink it. They're like, well, market maker is this and that. There's some secret algorithm. It's just human psychology and where are the orders going to be? What happens when those orders get triggered? And what happens after all those orders clear? What's left? Right? I mean, I think it's not simple, but it's different than most people think. Yeah, are there a lot of funds and institutions and algorithms? For sure. 70% plus of the volume is going to be that. But there's no evil king sitting at his computer all day like, I'm going to take out these stop losses. Come on. Market's too big for someone. I mean, maybe in small caps, for sure. But the Nasdaq, no. Alright, this has potential to turn into a little ascending channel. Need that 3 touch points here. We really only have 2 on the bottom side, so this is not formed yet, but it's attempting to form. Little sideways action here. If you guys haven't already, please do so. Hit the like button. Helps out tremendously. Really does. One person. It does. It makes a noticeable difference. But this little flat here that we've seen, last 4 to 6 minutes, well, 6 to 8 minutes, we gotta see this break in one direction or the other. If we continue trend, fine, I'll trade the trend. If we form some kind of channel, I'll scalp the channel. But this here, there's nothing here right now. I think King, are you baiting me? I know you've been here long enough. What's your thoughts on the rule that you need 25K to be a day trader? I just went on a 15-minute tangent about this. I think he's baiting me. Well, that average true range is now sitting at 30. It's not, you know what? It's higher than what we've seen the past few days at this time of day. But it looks like here we might start to see that fade a little bit. I hope not, though. So I'm curious. I know some of you guys are positioning yourselves here For me, there's nothing right at this very moment in this sideways movement. I have to see a break. But those of you that are trading this, are you long or short? I'm actually very curious how you're... Because this, in my eyes, is like 51.49. Big fan of trend channels? Yes. Straight up trends as well. Love them. Is a stop loss mandatory on Apex PA? I don't want to get denied a payout. So, I'm not like a rep that's gonna, you know, deny or approve payouts. Obviously at Apex, I don't work for Apex. But my best guess on this rule would be, as long as you're managing your stops manually, consistently, and you're never breaking one of their rules, I think it would be fine. I see nowhere in the rules at Apex that you have to have a live stop loss. Though, if you end up in a situation where you're managing manually and you get dumped on or something, or it pops, you could easily end up breaking a rule on accident. So, something to think about. Okay, well, there's a test of the low a day, but getting wicked back up. So, I mean, you look at this here. You get the test and a wick. So you get some stops getting triggered that at this time of day, what? Well, actually, that gave us about a 10-point move. Not bad. And then you get wicked back up, buyers buying the low of day, saying, oh, yeah, this is going to reverse here. I'm not convinced until we end up seeing an actual reversal sequence of bars. But now that we're starting to see a little bit of a break here, I'm interested in a similar trade as earlier. Nothing yet. Kind of a wick on that last bar here. Weak close as far as the bears. Obviously want to see a strong close out of the bears before I start taking continuation entries. King, what do the wicks mean outside of prices that they've touched? It's just the entire range of the bar during the duration of the bar. And the body is going to be the difference between the open and the close. Now, obviously, I don't know if that's what you meant, like literally. But I look at the wicks. Shows the actual full price action. But the bodies are important, especially when you're seeing a close. Bulls are trying to take this baby up. They're getting a little traction compared to earlier, obviously, but we still haven't seen that any kind of reversal sequence out of the bulls. They haven't been able to put that together. Still just interested in seeing a break of the low, and then if we can get a couple of bear bars consecutively closing near their lows, I'll sell the rollover into the third. And very simple price action, continuation, trend trading, but just got to see that set up here. Again, as far as news from here, there's really not a whole hell of a lot. We have a Fed speaker at 11:15. Fed speaker at 2:30. That's about it here. So we got a clean slate pretty much for the rest of the day. There we go. There's a Tesla low a day. Nah, King, in 2025, Fed speakers aren't moving the market much, unless it's Powell. But no, in 2022, the committee members, they would move the market, but now it's just not relevant enough. We're not seeing much movement at all out of Fed speakers. All right, so now that we saw a break of low of day, again, looking for a similar kind of setup as I was before. Obviously, before I ended up selling the retest of the open of the previous bar, but really I'm looking to sell the rollover of a bear bar closing near its low. Ideally, a growing bear bar. Bulls really trying to wick it up, though. There we go. Getting a little bit of a test here. Do you pay attention to volume with scalping? On futures, honestly, I'd be lying to you if I said it was super relevant. On futures, with stocks, especially smaller cap momentum stocks, volume is an absolute top 3 concern. 100%. On futures, I don't pay too much attention to volume, to be honest with you. I just don't necessarily see a ton of need for the way that I trade. You might rely completely on volume, that's fine. Mo, morning Nico, 1 win and done. Took a short to pre-week low. Managed to capture 200 points. Oh my goodness. You got 200 points all in one trade. Great work. That's a big old trade. You know, it's tough to catch those big moves with prop because trailing drawdown. Now in static accounts, you can absolutely catch big moves. If you have some padding to maybe bet on big moves and then be wrong because the probability of catching a big move is going to be lower, just naturally. But you kind of have to have the right setup. Maybe you're using static accounts or you have a big buffer with prop. But in a personal account, man, catching a big move is kind of a different story. Great work. I'm curious if that was prop or personal. But that's a big old chunk of that move to catch. That's awesome. That's great. Yeah, take profit. There you go. Great firm. I love take profit. Idea hasn't changed here from that first trade. Again, we're sitting one trade so far on the day, up 1,200 bucks. Seeing if we can catch a similar idea here. But now I need to be more picky with entries because we're seeing bulls step in a little bit. We're seeing a little bit of bull bars mixed in. Not where we weren't really seeing that previously. Do you recommend going for more than one trade a day as someone who just became profitable? Well, did you become profitable off of one trade a day, or did you become profitable scalping, 8 trades a day, 12 trades a day, 4 trades a day? Do what's working for you. If it provides you the setup, I think it's my opinion that you should take the setup, if it's a good setup for you. Over trading only exists if you have no edge in the trades that you take that make it over trading. If you take 30 trades in one day, but you had edge in all of them, or maybe 1 or 2 of them were kind of mistakes, but the vast majority you had edge in, you did your job. But if you take, even 10 trades in one day and 8 of them were trash, that's overtrading. You can overtrade with 2 trades a day. You can also not overtrade with 50 in a day, if that makes sense. It all depends on if you're taking your good quality setups that you know have worked for you in the past, and you have data to prove that. Ideally, bigger sample size, the better. Well, we're forming a flat bottom here. Flat bottoms, as you know, have a high probability of breakout. At least higher than an ascending or descending channel does, as far as breakout. In an ascending or descending channel, that probability of a breakout succeeding is about 20%. With a flat bottom, I'd call it more like 50-50. One trade a day, it's a quick scalp, and I stopped trading because I'm afraid to give it back. Well, you know what? A lot of people would say, well, then you should trade 1 time a day. What I would say is that fear of giving it back, that's a problem. And each day is only separated in your brain because it's a new day. There's continuity in trading. The only separation is by our perception of it being a new day. So if you take a trade Monday, Tuesday, Wednesday, Thursday, Friday, you took 5 trades. But if you took 5 trades all on Monday, and all 5 trades in both cases were good, high probability trades with edge for you, there's virtually no difference, correct? The continuity is real. The separation only exists in your mind because you're a human who sleeps. And you get up and the sun comes up and it's a brand new day and you're fresh. The fear is only going to go away by trading more. So try to find good setups throughout the day, during the time frame that you perform well at. If you don't perform well at 2 in the afternoon, but you do great at 9 a.m., then just try to take, 2, 3, 4 high quality setups around, that 9 a.m. to noon time, because there's probably more setups for you in the average market, maybe not this market, but in the average market that you're missing. So the way that you're going to get over that fear is by trading more. And if it means sizing down, then do that for a period of time. But we are sideways right now, so as far as edge, I think it's hard to come by in these last couple minutes. But if we end up seeing a rejection, we could be forming kind of a flattening out but still descending channel that I could start taking some scalps in. Or a scalp here or there. But I'm also happy to trade continuation to the downside if we see it. Coming into the 20 on the 2-minute, 20 EMA that is. There's the touch. Here, this one shows it a little better. Now, if we end up seeing a breakup through here and we get 3, I would say, maybe even just 1 more, since we got that bull bar previously, kind of a small bull bar. But if we saw this one close near its high and then the next 2-minute bar also shoots up, closes near its high, I would buy that rollover because that to me is good enough for my stats to look good as a trade. Here, however, it's for me, it's too early. Probability is quite a bit lower here for success buying a breakout or buying a reversal, I should say. But what does that mean? That means your reward potential compared to your risk is higher because you gave up on the probability, or you gave up some probability, I should say. That relationship between reward to risk and probability of success is an ever-shifting equation throughout the day. You have to find those moments that work for you and hit them. So the 20 EMA on the 5 minutes, still quite a ways away up here. Got about almost 100 points for a test of that, 90 points. We're kind of sitting right at the 20 on the 2. Obviously the 20 on the 5 is going to be a little more relevant. Neither of them are perfect though, good enough for taking trades just on their own. But I consider them. This is that zone here where the market's deciding, okay, is this a descending channel or a successful breakout? Remember, probability of breakout is low, but if you see it, then you oftentimes get some kind of a move, a measured move. Upside. Self-fulfilling prophecy. You need information first, and then you get people backfilling. So is that a close near the high of the bull bar? Yes, but it's right at the 20, and it's below the previous wick. Okay, which is just information. It's not voodoo magic, it's just information from the market. King up 600%. Options, I presume? Okay, so that 20 on the 2-minute is becoming relevant here, but again, unless it lines up with something in the price action, personally, I don't trade around the EMAs. I tried to make EMAs work on primarily like ETFs just on their own years ago. Could never do so. It's just, I don't think it's relevant enough. I don't think it's a self-fulfilling prophecy enough. I don't think enough eyeballs are on it to really make decisions based purely on that. But I do have to say, if we ended up seeing a breakout upside in kind of a bull sequence, 2 or 3 bull bars closing near their highs, growing ideally, that wouldn't surprise me to see a bit of a reversal here. Is it what I want? Not necessarily. Again, I would love to see this thing just continue downside all day, light a fire for next week and get some real volatility going. But it wouldn't surprise me to see that here if we did. Okay, we have kind of a flat top there. Again, high risk of breakouts on flat tops. Oh, it looks like Asia session. You should have been here Tuesday. Tuesday, Wednesday. It was even worse. Right now, the ATR is sitting at 28 for 10 o'clock. It's not too bad. When trading like this, how do you decide where to place your stop and take profit? So it's going to be arbitrary sometimes, and then I get the edge just on the entry, okay? But sometimes if the setup allows for it, I will drag the stop and create a positive reward to risk situation. And then if I need to, like for example, yesterday, maybe it was the day before, I think it was the day before, we had a situation where my stop was just above a whole dollar region by 1 tick. I think it was right above like 500 and a quarter. Maybe, yeah, like I think 20,500 and a quarter. That was planned on the entry. I got a little lucky on the entry by getting just that exact tick. But if I hadn't, I would have adjusted that stop. Same thing on the profit side of things. If something's in the way and I have to adjust from maybe if I'm running a 40-point target and I have to adjust it, knowing that probability is higher on the trade down to like a 20-point target, I will. Haven't had to do that, at least on today's trade. Your stops and take profits, they can be arbitrary if you want them to be, as long as you think about what they are on the entry. Okay, they don't have to be so well thought out as far as the price action. Assuming they can be, but that's assuming your entries, you're thinking ahead. And also remember, if you're somebody who adjusts your stops and take profits a lot, in a big way, don't forget to adjust your volume also. Unless a trade is much higher probability, you don't necessarily want to be risking so much more money on it. These are the time frames that I look at on futures. Sometimes I'll pull up a 15-minute, but I prefer really to get the context of the day from the daily, trade off the 2, and watch the 5 because it's very relevant and other people watch the 5, which is why I care about it. Apex doesn't have issues with changing size, right? My understanding is that they don't mind if you do it a little bit. They say that you can. However, depending on the rep you get when it's payout time, if you're trading, you know, 1 contract and then all of a sudden you're trading 10 because you happen to be right on the day, they might make a discretionary decision to not pay you out. So I wouldn't go crazy with changing size, but you can a little bit here and there. Or if you have consistent reasoning for why you change size, I'm sure they'd be fine with that. But there's a fine line. If you start sizing up just to get losses back, I don't think they're going to be fans of that. Gee, I don't know how to say your name exactly, but keep going. Don't quit. I know it hurts. We've all done it. Okay, so right now what I'm kind of thinking here is unless we get some kind of bull sequence to initiate breakout potential, which I would happily trade, right now, I mean, the obvious place to draw this really is here. But I would call that 2 touch points, not 3. If we can get a pullback upside and a rejection, all of a sudden, guess what? We're in a descending channel, and then I'll continue to scalp, and that 20 being right there makes it even better. But I'll leave that there in case we see that develop. Same thought process to the downside, by the way. We have 2 touch points to the downside. I'll draw that if it becomes relevant. I'm crazy thirsty today. You have those days you drink about 2.5 gallons of water and you can't get enough. All right, Eric, have a good weekend. All right, let's see if we can get some kind of development here. Again, I am open to upside trend, downside trend, or channel. Channel would actually be good to try to get some trade volume in. ATR sitting at 27, which is pretty decent for this time of day here. Compared to the last few days, can't complain. It's just the action's a little chop. Got to see some kind of development here. We're getting close here to the bottom. If we see a test of the bottom side and we get a 3rd touch point with a bounce, all of a sudden that bottom is confirmed. Well, I shouldn't say it like that in case someone takes it the wrong way. All of a sudden the bottom of that trend line, I should say, is locked in for trade potential. What's your thoughts on coin? You mean the stock? Or are you talking Bitcoin? You guys know my thoughts on crypto as far as, you know, Coinbase, the stock. Probably not the guy to ask at this point. Just because I'm not studied up on their recent fundamentals. Well, whichever rejection here we get first tells us a lot, if we get a rejection or a bounce, I suppose. Within this channel, I mean. Coinbase the stock. You know what? I'm not the poster boy for crypto pumping or crypto, being a fan of crypto in general. So Coinbase, in that world, for me, I'd probably pass on it just because I don't think crypto is practical at all yet. All right, here we go. Let's see if we get this upside test. Trend line maybe lining up with the 20 on the 2-minute. Here, the 5-minute actually looks even cleaner if you look at the 5-minute. I need that one more touch point. If we can see a rejection here, beautiful. If we see a breakout, fine. I'll trade either way, don't mind. Yeah, Kings, you know, I assume you're talking about the crypto thing. I don't know. For me, right now it's a tool to speculate, which is fine. And I'm not saying it can't go to $1 million per Bitcoin off speculation, fine. But until, personally, I feel as if I go through a Starbucks drive-thru and I feel like it is genuinely a better option to hand over my phone and pay with a Bitcoin wallet. Until I feel that way, I can't look at it and say, wow, this is such an incredible thing. Right now, it's a speculation tool. It's not, I mean, is it really like a currency? Sure, but it's not a practical currency, at least not in my head yet. Could we get there? Maybe. Yeah, exactly, Shiloh. If it's faster, more secure, quicker. You guys know I have problems with the banking system too. Your money in 2025, this should all be instant. You shouldn't have to wait for anything. If crypto can take that over, we get, I guess, some kind of regulation. Not too much, but maybe some kind of regulation. But it's instant. It's immediate. You don't have to wait. You pull out your phone. It's quicker than paying with any kind of card. All of a sudden, it makes a whole lot of sense in my head. We're not there yet. Not even close. Man, there's problems with the dollar, but it's like, which one's the better option right now? Explain the difference between a channel and a trend. What exactly are you looking for? Okay, simple here. This is the early stages of a developing potential channel, right? This here, there's not really a top bottom with three plus touch points. This here's a trend. We took a trade in this trend. I take continuation trades in trends. In channels, I take reversion trades, scalps, until we see a breakout, and then I start, you know, if we get another intraday trend, then I'll take continuation again. Quicksilver, one good thing about crypto, no PDT. Agreed. However, the spreads are massive, so it doesn't really make it better. The spreads in crypto are insane, the fees are crazy. I mean, in my opinion, it really is an awful trading product, but no PDT is good. So we're kind of hanging up on the 2-minute at the 20. We're getting close to a test of that trend line, but I kind of want to see a good, clean test of the trend line, then a big rejection. And then all of a sudden, this channel is kind of locked in as far as potential for me to trade it. I think as far as a trading instrument, the futures market is very efficient, right? Which is not ideal. It makes it a little more difficult to find edge, right? But as far as just the instrument itself, not necessarily how it moves, but the instrument itself, futures are very close to a flawless day trading instrument. It is just beautifully designed. That's kind of what they were built for, hedging and trading. I think it's hard to beat that, especially with no PDT. But as far as getting as much edge as you possibly can, in my opinion, your best bet's still going to be like small cap momentum stocks. Just two different worlds, but both worth dipping into, I think. Still kind of testing, wicking up here toward this top of this trend line. Let's see if we get a good old rejection. Making that test here now. Let's see where this goes. At this point, I don't care if we reject or if we break out. I just want something to happen that isn't sideways. I'll take continuation or reversion. Do what the market tells you. Do you take breakouts? Yeah, but I honestly, I'm not like a super early breakout trader. I'll trade continuation of currently occurring breakouts, which requires a little bit more information, which usually requires a bar or two more than someone who trades actual breakout attempts. Because 80% of breakouts within channels are going to fail over time. These charts are think or swim. Chris, what do you do when the markets move sideways? Do you keep your eyes on the charts all the time, or do you do other things while trading? Okay, so if things are just going sideways, if I see potential for something, I'm watching. Most of the time, I'm watching the charts. At this point, I'm hanging out with you guys when the market's going sideways. So I'm doing this as well. But if I were just trading by myself, not currently like doing this or whatever, and the market's going sideways, I'll make sure, I'll take a look, make sure I'm not missing anything. But if I'm watching and it's like there's nothing here, I need about 15 more minutes minimum of data. I don't think there's anything wrong with play music, listen to a podcast, do something. But if you're trading, trade. Don't just fill your time with something super distracting that's taking away from your trading. The screen time is important. So you should always have one foot kind of in the market. But, I mean, I think sitting here in silence, staring at a market going sideways, waiting for more information to come is a great way to hate your life as a trader. If it's going sideways, listen to something interesting, but pay attention. But I wouldn't be listening to podcasts and music while you're like taking trades, ideally. You can pause it. What's your approach? That's a good question. What's your approach to handling emotions and not throwing everything out the window once you get into a losing streak? Okay, so first of all here, what I'm watching on the chart is we're seeing a breakout potential of this trend line. Same idea, guys, as we saw earlier today when we took that one trade. I'm looking for consecutive bull bars with a bull bar growing, closing near its low. Sorry, near its high. And then I would buy the rollover for continuation. If we see this breakout continue, I need more information at this point. We could very well see a reversal, and then I have to redraw the trend line, and then we're left in a situation where we have two touch points, which would suck. But Kashi, this chart is actually think or swim. This up here is ninja. Okay, my approach to handling emotions and not throwing everything out the window once you get into a losing streak. Okay, so I have a lot of thoughts on this. First of all, when that happens, you need to understand your triggers. And ideally, you would put in the early years especially, you would put in rules that stop you from hitting your triggers. So if one of your triggers is losing 3 trades in a row and you recognize that in yourself pretty consistently, then maybe you should set a rule that's, and hear me out, you should set a rule that says, hey, if I lose 3 trades in a row, or 2 trades or whatever, I'm done for the day. Now, let's think about this. What does that do to your trading? Well, you don't want to stop trading for the day. You like trading. So what do? You pick your entries more carefully. Because you don't want to lose 3 in a row, because then you have to be done. And you don't want to be done at 8:45. So you start really being picky about your entries. Even if you're still taking 8 trades in a day, you're more picky. And guess what? All of a sudden you're taking more A setups than you were before. Guess what? Now you're break even, if not profitable. And then over time, once that happens to you enough, you just get sick of losing and you kind of stop spiraling. Because you know that the pain of just losing a trade or 2 trades or even 3 trades in a row is not nearly as bad as going on tilt. Okay, so we're still attempting this breakout here. Really need to see if we can get some kind of continuation. Market's still indecisive. And if not, if we don't end up getting either a return to downtrend or an uptrend, we may just end up seeing a new ascending channel. You know, we have kind of a double bottom here, and a lot of people might buy that double bottom. Me, I would be more inclined to sell that if we saw a test. Because flat, you guys know my feeling on horizontal levels. They just have a tendency to break more often than ascending or descending. I think they tempt fate a little too much. Well, ATR is falling here. You can see we're now falling to 23.5. It's not awful. You know, back on Tuesday at this time, that ATR was 12. So volatility has essentially doubled over the course or since earlier this week, which is good. It's not crazy high yet, but it's a hell of a lot better than it was. You know, a little ascending channel formation here would not totally surprise me. I'm actually this point, kind of hoping we do see that. I answered this question a little earlier. Maybe you weren't here. Totally fine, by the way. No, I don't use volume in future strategies. I heavily incorporate it into trading small cap momentum stocks. Volume though on futures to me is it just doesn't really fit in as something I want to put brain power towards. I'd rather just focus on price action since volume is always pretty good in futures, which is not the case at all in momentum stocks. It's very touchy when volume comes into play. Just a reminder, guys, by the way, 80% off on Apex ends Monday night. If you use code BIG, by the way, no matter when you use it, it'll always give you the best deal and single day pass. Unless something changes with single day pass, but as it stands right now, code BIG will always give you the best deal available and single day pass. You can pass those evals in one day and be trading funded account if you pass the next day. Which is cool. You don't have to wait. Okay, retest here, that 20 EMA on the 2 minute. Right here. Now, also consider, guys, we talk about this a lot. Where's my mouse? There it is. We talk about this a lot. You get, if you extend these little trend lines, you oftentimes get retest of the trend lines, which is also somewhat lining up with the 20. So I'm considering that. The retest itself is kind of a tough trade. I don't think there's a lot of edge trading the retest, just because it's the market trying to determine what's going to happen here. But really just looking either for trend confirmation, at least for my trading. It doesn't mean it's going to confirm some 400-point trend. But looking for some kind of confirmation setup for continuation or a 3 touch point channel to scalp reversion using limit orders. Just one trade in the day so far, up 1,200 bucks. Trying to get some more stuff here going. So there's the attempted break. All right, here we are, really trying to see if we break downside through. You guys see on both the 5 minute, here's the 5. You know, obviously you're gonna break that same line, and then here's the look on the 2. So 1 bar, just that break is not enough, but I wanna see the following 1 to 2 bars and see how we really react. Because again, it's not uncommon to see the buyers wick that back up and then really test that level. Since it was so obvious, I know a lot of algorithms probably caught that top trend line. And the more obvious something becomes, the more likely it is to see a retest for the market to really make some kind of decision. All right, back in 2. All right, still kind of sticking around this major level here. How much do you consider major levels? And by the major level, I'm talking the trend line. How much do you consider major levels? I.e. 19.6, 19.650. So the more obvious, and this goes across the board, no matter what instrument you're trading, the more obvious the level to the more people, and the more, therefore, the more algorithms, the more I consider it. Even like 20K though, which is probably the most obvious level in recent memory, to me is not something that I'm going to buy the downside test of, hoping for a bounce, for example. But if we saw like a downside low of 20,001, if we come in for a second test, I would absolutely put a stop limit sell at like 19,999 3/4, because we have two things going on now. We have the 20,000 level, which is a psychological break, and we have a previous low with stops beneath there. So I'm looking for multiple things usually on most trades. But I guess to answer your question, 19.6, 19.650. Honestly, I don't think they're quite relevant enough to really consider. I would consider 19.6 more than I would 19.650, for example. Kind of like a whole dollar versus a half dollar in a momentum stock. The whole dollar takes precedence. But in futures like 19.6, 19.7, I think about it, but I'm not making trades around it. Though it could be a supporting factor in another trade, like explained. How are you guys sitting right now? Are you flat or are you in a position? Because I see here a potential 2 touch point, looking for 3, ascending channel on the 2 minute. You guys see what I'm looking at? I'll show you. I'm looking at potentially this forming. But I need a 3rd touch point. We really only have 2 touch points on the top and bottom so far. I go for a minimum of 3. Bigfoot flat. Yeah, me too. I'm flat right now. 1 trading on the day. See what else we can get. So you can see that someone might argue that's 3 touch points on the channel. But this last touch point here, I really want to see some kind of continuation rather than just a soft, mushy bounce. Because to me, this 3rd touch point is not really yet finalized. Brian's flat, yeah. I think some of you that are in positions don't want to say. In case we get you say, hey, I'm long, and then we get like a big news dump off. Good work, Shiloh. Mad Cat flat, Rob flat. Yeah, gotta see this market be a little bit more definitive here. Really attempting this upside channel test. Here, this gives you an even better look. I'm not respecting that channel too well. We could be seeing a flat bottom here. And if we return to a downtrend, honestly, I think that would be a great scenario. here we come in for the downside test. Okay, so just a thought here. Potential little horizontal level here. Volatility is a little low. The ATR is 20. Okay, so in a high volatility market, I might place a stop limit sell right below here. But I'm still looking at this flat bottom for a potential breakdown. And if we see that, we could return right to that downtrend, and that would be wonderful. And yeah, we're down 2% on the day so far. But I don't care. We've seen 3, 4, 5%. The market can always keep going. Buying purely based on how much it's up or down, or selling based purely on how much it's up or down, I think is can be better served by looking at the average true range, if you're going to trade that way. Really looking to attempt this flat bottom here. Yeah, I'm actually curious. I know that, I'm asking you guys to say something for me, but the past few days, those of you guys who have been on the stream, has it been loading fine? Have you had buffering issues? I have no problems on my end. I have it completely optimized for what YouTube wants from me. Very fast internet. I don't have any buffering on my side. Okay, thank you guys. Here's the test. Flat bottom. A break would not surprise me, though. I gotta be honest with you guys. I would love so much to place a stop limit sell right here, right now. What's stopping me? This. The ATR is 21, so if I place that, I'm asking for an outsized move well above the ATR quickly. I just think that erases my edge. Okay, good. Thank you, guys. Thank you, guys. I want to get it optimized so I can just not think about it anymore. And I think it's pretty well optimized. So here's that flat bottom. Now, listen, something that could happen, just so you're aware. Here, look at this. We could end up seeing this hold and form a slightly ascending channel, and this becomes the new bottom and the third touch point of this ascending channel. Now, that would be more like a wedge, right? But I'm more inclined to think that we might potentially just break this flat bottom, go lower, and then I would love to start trading some continuation, but we got to see. We got to see what the market decides to pull here. Here, this gives you a better view. Here's the test. Here is the test. See that? Potential break, taking out some stops, giving us a little bit less than a 10-point move. This time of day, taking out stops is not going to push you 15 points usually. But there's the attempt. Let's see if we can go lower. Now from here, if we saw 2 or 3 consecutive bear bars growing, closing near the low, all of a sudden, guess what? That becomes a continuation entry for more downside. If we see that. What's up, Chris? Good to have you. Hey, Che. Che, am I saying that right? I don't know how else you'd say it. What's up? How you doing? So, if we can get some continuation downside through, that's really what I'm after here. Otherwise, this becomes a flat bottom, and then we're just tempting fate with a delayed break, really. Shay, there you go. What's up? How you doing? Okay, there's the attempt. There's a further break. Good. Oh man, what 2 days ago, what did we talk about? Test of 19.5 would really be great for us traders to see some increased volatility. We're getting increased volatility, not as much as I would have hoped. But here we are in the 19.5s. Goodness. I feel like finding my edge in trading is the hardest thing I will ever do in my life. Now, I know that you're probably saying that slightly tongue-in-cheek, but I'm not gonna lie, professionally, becoming a trader with edge is probably one of the most difficult things you will ever do in your life. But that's why you shouldn't quit, because if you get there, the rewards can be tremendous. And the beautiful thing about trading is, like, if you're working your way up a corporate ladder or doing these things, some of it is out of your hands. You can go 40 years, and if they don't give you the promotion, tough luck. But with trading, you can always come back and give it more screen time, and you have every opportunity to just not quit. Which is the beautiful thing about this industry. It's all in your hands. The way that you lose is by saying, I hate this, I lose too much money, this is too hard emotionally, this hurts too much, and you quit. That's a beautiful thing. Okay, so now that we've seen this break, bulls are trying to take it back upside. What I'm really looking for, a couple consecutive bear bars, 2, 3, closing near the low. And guess what? That's a continuation entry for me. But let the bulls try to have their fun here. See if they take it back upside. Or we very well could just form a descending channel here. But again, we need those 3 touch points. We've been getting teased all morning, not really getting our 3 touches. Guys, I sense a common issue here. You can be as confident as you want in your trades, but this business is not about being right 95% of the time. I guess, you know, you could be if you run a very negative reward to risk, but let's assume 1-to-1 reward to risk. Not that that's the right way to go or the only way to go, just for the sake of argument. You guys know how I feel about that. It's all a math question. But for the sake of argument, let's say you're going 1-to-1 reward to risk. This is not a being right 85% of the time business. You're going to feel confident in every trade you take. You should at least feel relatively confident in every trade you take. This is a business of being right 54 or 55% of the time. Again, assuming a 1-to-1 reward to risk for the sake of argument, which means you're going to be wrong almost half the time, no matter how confident you are. Get a little bit of edge, scale out the sample size. You're going to be wrong a whole hell of a lot of times in your career. No, I do not use Bookmap. I don't even know what Bookmap is, to be honest with you. I've never tried it. I think I've seen it, but I don't exactly know what it's supposed to show you. I think a lot of people, they see tool, not that you're saying this necessarily, but a lot of people, they'll see like a tool that's trendy online, and then they'll be like, wait, you don't use this thing? Nope, just price action. It is king, will always be king. Yeah, Jason, performing best during certain market hours is very common. Very common. For a lot of people, it's going to be the morning hours. In central time terms, a lot of people make the most amount of their money between 9 and 11, sometimes 9 to noon. Most people lose in the minutes right after the bell, and a lot of people lose in the afternoon. Though if you get to a point where your data shows that you make money in the afternoon, it's just a question of life balance. If you have edge from, 9 to 3, but you just have a lot less edge in the afternoon, well, if your number one priority in life right now is to make money because you're younger or maybe you're older, you just want to make as much as you can, and you're not against working, trading 6+ hours a day, well, then you should probably trade the afternoon, right? But if you find that no matter what you do, you lose from noon to 3, then you can have a couple of options. You can either just trade 9 to noon or 9 to 11 and then call it a day. Or if you're like, you know what, I want to work longer, this feels weird only working 2-3 hours a day, then you need to figure out how to have edge in the afternoon so that you can work through the afternoon, even if it means you make less money. Your hourly rate, quote unquote, as a trader will be different, most likely, throughout the course of the day. Do you want to work just when your hourly rate is highest? Or do you want to work all day as long as you're making some money? Is really the question here. Bull's trying to take this back upside here, coming into the 20 EMA. Let's see if we form a descending channel here, because we're kind of coming up to what would be that touch point right here. We only have, I would call, 2 touch points. Lining up with that 20 EMA is the potential 3rd touch point. We see if we get that or just break right through. Alright, there's the test of the 20 and that potential 3rd touch point. See if we break through or if we get a rejection here. That's going to be very telling. When we've gotten here for the last maybe hour plus, we get a channel really trying to form. Getting maybe 2.5 touch points on a side, and then breaking out. I mean, what are you gonna do? You gotta wait till the market gives you something. And this market this week has not been giving us a lot, though we have been doing well. Just not big numbers or anything. And the reason for that is not too many trades. I think we took 1 Wednesday, 2 yesterday, 1 so far today. But this touch point is a big deal here. Here's the test. All right, so there's the initial respect to that level. I suppose we should draw this. I would draw it like this. Just draw it. Trend lines. There's no secret. Just draw it how you think the average of 1,000 people would draw it. We can go ahead and delete this to keep our chart as clean as we humanly can. So there we go. If we get... I want to watch this next candle. This candle here will close in 45 seconds and see. So that there is a potential third touch. You explain once more what was the significance of the horizontal line that you drew at 581. That was my cursor. I had it there because that was the potential third touch point. We actually got that. So I had it there because I kind of lined it up. Here, I'll show you. I just kind of lined it up visually and said, since I want 3 touch points to really form a tradable channel, I just set the cursor there because that was the point. I mean, it's not a coincidence, right? I mean, I was looking at this. We could have very well just had a breakout too. That's why I was waiting to see if we got that. But now it's a question of, do we get a mushy rejection and then a retest, or some continuation and a full-blown third touch? That's the question now. Yeah, you know, Peter, the greats in any industry, especially like trading or tennis is a good example. You just win slightly more than you lose, and then you scale the sample size to oblivion as much as you humanly can. So that's what I would call somewhat of a mushy rejection, which makes this fourth touch also very important. By mushy, I mean it takes it down maybe about 50% of what was expected. We don't really get a lower low out of it, which would be a full rejection and a full third touch. And we're seeing the bulls take it up with more recent information, we're seeing the bulls take it up more aggressively and really make a test of that, which does increase the chance of breakout slightly from the typical 20%. See, Rob gets it. Rob, I always talk about this. Casinos have a tiny edge. Well, I wouldn't say tiny. They have a small edge, and they scale the sample size like crazy. You know how many hands are played in Vegas every day? Now, as traders, it's the same business model, but we just have we try to get a little bit more edge than Vegas might have. And we still scale the sample size as much as we can. Not nearly as much as they do, not even close, but as much as we can. All right, now I want to see us clear the low of that previous rejection to kind of put the mushy rejection out of our heads a little bit. Reminder, guys, Monday night, Apex's 80% off sale ends. Use code BIG. You'll always get the best percentage off deal, no matter when you use that code, and you'll get single day pass, which means you can pass the eval in one day, be trading in your funded account the next day if you pass. But right now, that deal's 80% off. That ends Monday night. So gotta get moving. You see this? We're getting really, really mixed feelings on this rejection here. I would call that about 2.5 touch points as of right now. I mean, you look here, we're barely getting a 20-point move. So if you were scalping with 10-point targets, that might work out for you just fine. But probability is certainly, in that case, in my opinion, my estimation, less than 55%, which is what I'm looking for. ES, I like ES. ES is very similar to Nasdaq. Nasdaq just is going to have more volatility. I think in the long term, your commissions will be a little bit cheaper on Nasdaq just because you typically get a slightly larger percentage move on the same move. So ES is the OG for sure. All the old head traders from 20 years ago will say ES is the way to go. But I think NQ is kind of slowly becoming what ES was 20 years ago, 10 years ago, even 5 years ago maybe. Personal preference, just trade what you make money on. Does not matter. All right, a little bit of a push now. Here we go. Do you trade gold? I have traded gold. More ETFs than futures. But as far as futures, I stick to NQ. All right, here's the test of the downside break. There we go. Let's see if we can't get a push. Now, what I'm really watching here is not necessarily, if we get it, that's fine. But not necessarily a huge downside trend move, right? Because we need context. Look at this. Look here, right? If this ends up being a descending wedge, this would be the third touch point of this bottom here. Right about here, actually. So that would be a slight overextension. So we need to see how the market reacts here. Because we could see this turn into a descending wedge or a return to the downtrend for kind of a midday measured downside move. So this bar and the next bar really, I think, mean a lot. Nice, nice, nice downside move here. Pushing in for potentially a test of 19.5. You know, we had a question earlier about the whole numbers. 20K is going to be obviously the biggest. Not that I think it's worth just trading off 20K. I think there should be something else too. The half, we'll call it half dollars, like 19.5, 20,005. Kind of tier, we'll call those tier 3, whereas like 19,000 would be like tier 2, 20,000 tier 1. And then like 19.6, 19.7, 19.8 kind of tier 4. As far as relevance in my head at least. All right, here's the test of 19.5. Now you guys know what I'm looking at now. Rather than drawing this like this, which just broke hard, this could turn into something like this, though that's starting to get very aggressive. That's a very aggressive downside, what might end up here being support in a downtrending channel, but that downside trend line is so aggressive, I don't think I'd be caught buying the test of that. I'd more so be interested in shorting the top end of this trend line here, since that's such an aggressive move. If we see that bounce, right? If we see this continue, then looks like we're entering a kind of a reset of that trend that we saw earlier. All right, guys, well, listen, you know what I'm looking for at this point. Up 1,200 bucks, one trade so far today. I'm going to keep watching here and see if market gives me anything else here. And we'll get that sample size up next week, ideally, if the market conditions allow for it. Every single morning, listen, if you're not subscribed, every morning, 8:15 a.m. Central, every day, I am live here for a minimum of 2 hours. Today, we went over 3. Hope you guys have a great weekend. Rest up. We got work to do come Monday. All right, I'll see you next week. Have a good one.